Your mortgage payment is more than principal and interest. In Northern Virginia, property taxes can change the affordability picture. Today, we will connect assessments, tax rates, tax bills, and the monthly payment buyers actually need to understand. A property assessment is the local government's estimate of a property's taxable value. It is a starting point, not a permanent promise. The tax rate is applied to that assessed value, resulting in the real estate tax bill. Both parts of the calculation matter. Many buyers mistakenly assume they will pay the seller's current tax amount indefinitely. That is not how the system works. A prior owner's bill reflects an earlier assessment and an earlier tax rate. After purchase, the numbers may be recalculated or updated. Assessments and tax rates can change. That means affordability should be evaluated using the full monthly picture, not one inherited number. Renovations, new construction, and local budget decisions can all influence what a homeowner eventually owes. Northern Virginia is not one tax system. Each locality handles assessments, rates, calendars, and appeals differently. Fairfax, Arlington, Alexandria, Loudoun, and Prince William each require local research. Do not assume one jurisdiction's rate applies to another. For buyers, property taxes influence the debt-to-income ratio and the monthly payment. A small tax difference can affect qualification. A lower purchase price with higher taxes may not be more affordable. Compare principal, interest, taxes, insurance, and escrow together. Homeowners should review their assessment notices carefully. The notice is an opportunity to understand the number before it becomes a budgeting problem. If the assessed value appears incorrect, localities may provide an appeal process. The process usually depends on deadlines, forms, and evidence. Comparable sales and documented property condition can help support a claim. A strong appeal begins with specific, organized information. Sellers should recognize that buyers often scrutinize tax records. The tax history can shape expectations before a conversation about price begins. Inaccurate information can affect buyer perception even when it does not appear in a marketing brochure. Records deserve the same care as photos and pricing. Taxes are not background noise. They are part of ownership costs and long-term budgeting alongside financing, insurance, maintenance, and repairs. Real estate decisions involve significant sums of money, and small local details can change the strategy from one neighborhood to the next. One neighborhood may attract more buyers than another. A contract deadline can also shift leverage between a buyer and a seller. Imagine budgeting from the previous owner's tax amount, then facing a new assessment or a rate change. The monthly plan can shift quickly. Buyers may ask, "Can I afford this?" Sellers may ask, "Will buyers see the value?" Homeowners need to avoid costly mistakes. Start with the local context. Northern Virginia is not a single market, and each area from Fairfax to Loudoun behaves differently. Property type matters too. A condo buyer can face different taxes, rules, and costs than someone purchasing a detached home. Compare a condominium exterior and a detached home exterior, then show how taxes, association costs, maintenance, and insurance can differ. Treat simple online answers as starting points, not complete strategies. The relevant question is always specific to the property and jurisdiction. Consider 3 local examples. Assessments may reflect neighborhood demand, escrow adjustments may differ, and appeal calendars may change the timing. Real estate decisions combine numbers and behavior. Price and payment are crucial, but emotions influence how buyers and sellers respond. A buyer can become nervous, and a seller can become emotional. A strong negotiator understands both the financial facts and the human reaction. Before deciding, ask 2 questions. What do the numbers say, and what does market behavior indicate? Both answers belong in the strategy. A solid real estate plan identifies major risks early. In a purchase, those risks include financing, appraisal, inspection, taxes, and timing. In a sale, risks may include pricing too high or accepting the wrong offer. A smart plan makes those risks visible before deadlines arrive. Now let us review common mistakes. First, do not treat the listing tax amount as permanent or assume another market works the same way. Second, remember that both tax rates and assessed values matter. Ask for supporting documents and compare the numbers before committing. Third, do not ignore assessment notices. When legal rights or investment performance are involved, confirm the details with the appropriate professional. For buyers, treat the home search as a system. Weigh monthly cost, rules, repairs, and exit strategy. Before making an offer, organize the purchase price, taxes, insurance, escrow assumptions, repair outlook, and future flexibility in one review. For sellers, positioning matters. Price accurately, prepare the property, and understand the questions buyers are likely to ask. Tax records, condition, pricing, and timing can all become buyer objections. Preparation helps turn uncertainty into a clearer conversation. For investors, focus on long-term assumptions. Ask what happens if repairs cost more, taxes rise, or conditions become less favorable. A strong investment decision should remain reasonable when conditions are not perfect. Stress test rent, repairs, taxes, reserves, and timing. Escrow adjustments can change the amount collected each month. Review the estimate, the tax schedule, and the assumptions behind the calculation. Always compare tax burdens across jurisdictions. A nearby property can carry a different monthly cost even when the purchase price looks similar. Show two nearby properties with similar prices but different tax burdens, then isolate the monthly difference in a readable comparison card. Keep track of local assessment dates, tax due dates, appeal windows, and escrow review points. Timing is part of the decision. A clean local calendar can reveal when notices arrive, when appeals open, and when payments may need to be adjusted. The right real estate decision is specific. It depends on the county, neighborhood, property type, and individual circumstances. Build a decision map that connects location, property type, assessment, tax rate, monthly payment, risk, and the intended next move. Use a simple sequence. Verify the jurisdiction, review the assessment, estimate the tax burden, test the payment, and check the deadlines. For buyers, compare the full monthly cost, not just the purchase price or the seller's current bill. Before an offer, review taxes, insurance, escrow, rules, likely repairs, and your plan if the market or your circumstances change. Gather comparable sales, condition records, improvement details, and the relevant dates before deciding whether an appeal deserves further review. For sellers, accurate tax information and thoughtful preparation can reduce avoidable objections and support a more informed buyer conversation. For investors, test the plan against higher repairs, changing taxes, slower timing, and a less favorable exit than expected. Here is the checklist. Review local assessment and tax due dates, estimate escrow changes, understand appeal deadlines, and compare jurisdictions. Those steps put you ahead of people who rely only on emotion, rough estimates, or an old tax record. A strong plan is not generic. It is built around the property, jurisdiction, numbers, behavior, and risks. Property taxes can change after purchase, affecting affordability, strategy, and long-term budgeting. For a purchase, sale, investment, or relocation, start with local facts and build the full monthly picture before deciding. Use this framework: local context, accurate assessment, realistic tax burden, complete payment, documented risk, and a deadline plan. This process will not remove every uncertainty, but it makes important uncertainty easier to see and manage. In Northern Virginia real estate, the details matter. Review the numbers, respect local rules, and keep the full picture in view. If you enjoy our content, please like and subscribe to support the channel. It really helps us keep creating high-quality videos.